Hey there, folks. This is Mitch Firestone with Precision Trading Labs in New York City. Um, what we're looking at in front of us here is a daily chart of Rocket Mortgage. And I and some of our subscribers and community members we're all in trades based on this. And so some people have shorted this stock at this point right here. Some other people have bought puts, as well as couple of people have actually sold their call vertical credit spreads. So everyone has kind of expressed the trade at this region, but done it in different ways. So what's going on here? So right here we have an area. This is the daily chart here. So for the better part of 2 or 3 days in here, price was going sideways in this region between about 1790 and 1845. Okay, and so in this area where price was more or less going sideways and consolidating, if we think about that region, we can think about the people that are selling. We can think of the shares that are offered up. We can think of that as the supply of shares in this region. Similarly, we can think about the shares that are acquired by buyers in this region. We can think of that as demand. And so within this area here, supply and demand are in balance. And then right here, we had an exhaustion of buyers. No one was willing to buy here anymore. And so essentially, sellers ran down the price chart until they encountered willing buyers. And so when that occurred, again, there's no longer any demand in here. There is only supply. And so when price returned to this region, the theory and our assumption is quite often that there is a buying pressure that's waiting to be tapped. Excuse me, selling pressure that's waiting to be tapped. Essentially, this is untapped buying and untapped selling pressure here. And so when price gets up here, we're expecting another wave down, and that's what we got here. Okay, and so as I said, people have bought puts. Some people have sold vertical credit spreads, and a number of people, of course, simply shorted the stock. All right. So here's what we were looking at. Okay, before this. Okay, this is the before picture here. And so at the time, okay, I was looking at that region. Okay. For selling, and then actually, really, I was looking at this region to buy. This is actually a truly high probability setup, and I thought that price was actually starting to head down here. Okay, and at that point, then we have this demand zone here, which is an area of untapped buying pressure. Okay, and again, where there was an exhaustion of sellers here, as opposed to here where there was an exhaustion of buyers. And when price returned here, I was expecting to see another wave of buying, at which point then, of course, people could either buy the stock, buy a call, or if people wanted to sell credit, obviously one could also do a bull put vertical credit spread. Um, so as it turned out, of course, price then reversed and headed back up here. Okay, just as an aside, this is actually a very high probability setup here because we have a quality demand zone here. Okay, but on top of that, we also have these other odds enhancers here. This is the 200 period, the 200-day simple moving average. That's intersecting with that zone, and then also this is essentially, we can think of this as, kind of not literally oversold, but it is in the vicinity of its daily lower Bollinger Band. So for people that kind of believe in mean reversion from that, you've got that going on. So you've got this confluence of these indicators, as well as this quality demand zone here, and that actually makes for a really nice trade. Okay, so the point being here, though, is once this trade plays out here, and with any luck, obviously, this will continue to head down, and then we'll, of course, then close that position somewhere down here. But if in fact it gets down to here, we'll then enter that trade that I just talked about a minute ago. So that's the story with Rocket Labs. Excuse me, Rocket Mortgage. So the question, of course, is why am I looking at this? So if you saw the first video that I had done here, I mentioned that I am actually looking at Barron's each week and just kind of flipping through the articles and seeing what symbols they're looking at. Not that I literally care about what they're recommending, but they have a trade thesis. They've done some fundamental analysis, and I'm happy to kind of look at them. But then, of course, I want to then filter it and put it through the lens of our supply and demand methodology in Precision Trading Labs. And so, again, it's really any excuse to kind of look at some symbols that I might not necessarily be looking at. So that's why I was led to look at Rocket here. All right. So there's that. Let me show you a couple of other examples here. Before I do, though, the usual disclaimer, everything we do with Precision Trading Labs is for information and educational purposes only. We are neither money managers nor financial fiduciaries. All right, so here's another example here. Um, Here is what I was looking at last week on Instacart. Okay, again, here's a daily chart here, and again the same deal here. Now, when I looked at this, in fact, this was a quality demand zone, but you can see price had already actually gotten back here once and really twice. So this basically the bus has left the station without us here. Had I been looking at this earlier, let's say in the beginning of October, end of September, this would have been a setup that we would have been waiting for. But I hadn't been looking at this, so but we can see that this obviously has reacted to this and is kind of heading up here. Now, and of course, when I was looking at this, it then, obviously then started heading down. Okay. But this was what I was looking at on the 10th. Okay. So now if we actually go to the live chart, we'll see where we are today. So here was that region that I was just that I was just showing you here. And here is a another supply zone here. Okay, so we have that drop, base, drop formation. Okay, we can almost think of that kind of looks really like a bear flag, right? So we have this drop, base, drop. So for the better part of a week here, a little more than a week, um, price was going pretty much going sideways in there. And again, there's that same narrative where essentially supply and demand were in balance, and then right here we had the exhaustion of buyers that I mentioned before. And so when price comes back up here again, there's the expectation that there is selling pressure that's waiting to be tapped. So you can see right there, that's what we were looking at last week. And then all through this week, it's been kind of inching up. And then today, it actually kind of clipped the front line here. And so we actually got into this trade here. So a number of us bought puts here. And so we bought the January 16th expiration, expiration, and with the 44 strike. The 44 strike is obviously above this region here. So when we bought that put, we were about approximately, what is that, about $2.35 in the money off of that 44 put. So we're running a delta of somewhere probably about close to 60. And the reason we're doing that, of course, is that we want, if in fact we're right and price is going to get swatted down here, we would actually like to get rewarded for it. So that's why we're not buying, kind of lottery ticket options that are way out of the money and running deltas of 15 or something, because at that point then the only way you make money with that, of course, is you need a huge move. And that's that again, we regard that as kind of like a lottery ticket mentality, and that's what we don't do here. So at any rate, so that's the option that we're in here. Okay, if you see this ladder here, this is essentially is expressing a reward versus risk. Okay, this is how much risk we have in the trade if in fact we had shorted the stock, and you can see that's about a dollar. What is that? $1.55. Okay, and so each unit of $1.55 represents 1 unit of profit. Okay, so this would be a 1-to-1 trade if you shorted and you got down there. That would be a 2-to-1. That would be a 3-to-1. Okay, so that's representing here. All right, so we're in that trade with Instacart here. Here's a trade that we recently had in its entirety that played out. Okay, here was a chart of Boston Scientific. Okay, and again, a couple of weeks ago, or about 3 weeks or so ago, Barron's had an article about medical devices, and so they were kind of playing up, oh, take a look at Boston Scientific. Again, I didn't really care what they had to say, but in fact, when I looked at the chart, and before that, this is where I was looking at it right here. Okay, because this is the November 3rd edition of Barron's, and so this is where we were. So none of this, of course, had already happened. Okay, so if I look now to the left here, this is a drop base rally formation. Again, this is a demand zone here. Okay, price, supply and demand were in balance, and then right there was that sudden exhaustion of sellers here, and then price kind of rocketed out of there. Okay, so again, what was left in its wake was this untapped buying pressure. Okay, so when price then eventually came back here, when price tapped the front of that zone, that's where we got in. So on what is that? On November 5th, a bunch of us got into the January 16th expiration. Oh, there's a typo there. It should be the 26th. That's 2026. The January 16th expiration 95 strike call. You can see the 95 strike, of course, is behind this demand zone. So we bought that about $2, but really about $3 in the money. So again, we're running a delta of probably approximately about 60 when we got into this. And then over the course of what was that? About 6 days, 6 calendar days from the 5th to the 10th, we were in that trade. And then we got out of it up here. So we got in here at 590. We got out of this at 835. That was a $2.45 gain. And so that's precisely 50% in terms of a rate of return based on the initial premium paid for the call. So at any rate, that was a nice trade for a bunch of our subscribers here. So if you bought one contract, obviously you made $245. Some people did five, and so that was a nice little payday of $12.25 for 5 contracts. So that was the thesis for that trade. So if you look at the embedded content below this video, incidentally, you'll see that there is a link to Barron's for its table of contents page. So if you look in on this on these videos each week, if you click on that, you'll see kind of the articles that are the articles that I'm kind of looking at. Obviously, I can't share the articles; it's copyrighted material. But of course, I can kind of mention what the thesis is and what the symbols are. That's not copyrightable. So that's in there. Also, if you look there, you'll also see there is a link to the original video that I did in this series, and so I kind of basically go in and explain a little bit more about what I'm doing here, and you can look in on that for further background. Okay. The last thing that I will show you here is I'm also looking at Kroger, and this was part of their what again part of that series or that article that where they were talking about how unloved the uh, consumer products are. The fact that the XLP ETF is the weakest performing ETF of the 13 major sector ETFs, and essentially that there are, essentially it's the unloved child, and so there are potentially some bargains to be had by looking at consumer product companies that are showing relative strength. So not all of them, of course, are weak. So that was their thesis for that. So one of the things that symbols that I was looking at was Kroger. So turns out there was already a trade that we had on that, but my eye actually got caught by this area right here. This was basically another one of those supply zones that I mentioned, and so this is a trade that we're actually waiting on right now. So when price gets up here, again, we'll express this trade by either shorting the stock or by buying a put, depending on when this gets here. At the moment, we would be open to buying the January 20th, and then the 70 strike. On the other hand, if this thing takes too long to get there, let's just say this thing kind of stalls out. we'll end up probably buying the March at that point. So we'll see when this gets here. If you may ask yourself, well, why don't you, if you didn't like the January, why don't you buy the February? Well, at least for the moment, there isn't a February contract. It's quite possible that maybe next week or so, maybe they'll start writing it. But for the moment, there isn't actually a February contract for Kroger. So we'll see what happens. So at any rate, that's what I got. So please tune in for further editions of this. I'll be doing 2 videos a week on this. I'll be doing one basically Monday or Tuesday, where I'm basically going through and showing the new symbols that are appearing in Barron's and what some high quality, high probability setups that I'm creating from that. And then at the end of the week on Fridays, kind of giving a rundown like what I'm doing here about some of the trades that either have triggered, anything that's closed, and of course things that we're waiting on. All right. So at any rate, that's what I got. So this is Mitch Firestone with Precision Trading Labs. Thank you very much for joining me, and I'll see you next time. Take care. Bye bye.